It's a reality check, a troubling time for Indian edtech startups, including the mightiest, unicorns such as Byju's, Unacademy, and Vedantu. The toast of investors through the worst of the pandemic, the times have changed and how. It's not just a funding winter. The crisis for Indian edtech runs much deeper with the re-emergence of offline coaching centers. Unicorns Vedantu and Unacademy have confessed that funding lines are drying up, and Baju Ravindran had to cough up half of the capital in the latest $800 million funding round in Byju's, and that funding round has still not closed. Suddenly, retrenchments, right-sizing and cost-cutting have become the new mantras for edtech. Not that funding has completely dried up, but investors have suddenly become more demanding, more cautious, and will only reward the performers. Clearly, with the global macroeconomic crisis and offline coaching centers resuming classes, the edtech industry is facing a challenge, a crisis of sorts, and is being forced to become leaner and meaner, even as the industry expands physical classes as well. Many are now, in fact, exploring the global market. The big boys in edtech had seen it coming, with dark clouds hovering over the global economy as central banks sucked out easy money from the financial markets. Unacademy expects a funding winter for the next 2 years, said co-founder and CEO Gaurav Munjal in a letter to his employees at the end of May. "We must survive the winter," urged Munjal, asserting cost-cutting will become the mantra at the unicorn. Unacademy has been trying to right-size, laying off many staffers. Unacademy gave the marching orders to about 600 employees. Capital will be scarce for upcoming quarters, confessed Vedantu co-founder Vamsi Krishna in a blog post also in May, attributing it to the global macroeconomic turmoil with the war in Europe and the hawkish stance of central banks. Vedantu laid off around 400 employees in May, about 7% of its workforce. Now, Byju's has been more circumspect in its public statements, claiming it's still hiring and will continue to expand, but it's obvious times have changed for it as well. It has been kept waiting for funds by Sumeru Ventures and Oxshot that had committed $250 million to the company. The company confessed it's because of macroeconomic changes and the capital will flow in by August. Meanwhile, founder Baju Ravindran has already contributed 50% to the latest fundraising round of $800 million, signaling his commitment and confidence in the long-term prospects of the company. Still, Baju has retrenched at least 500 from its group companies, Topper and White Hat Jr., and that may well be a conservative estimate. Not that the funding tap has completely closed, as we said. In recent weeks, PhysicsWallah joined the unicorn roster, while Upgrad doubled its valuation in its latest fundraising round in June. But clearly, investors are tightening their belts and scrutinizing business models more closely and becoming more conservative on valuations. So, the profitability of startups will be under the lens even as funding lines remain open, often through follow-on rounds. Was the unabashed romance of Indian edtech companies by investors over the top, a premature celebration of the edtech model in India? As the world rediscovers its old routine, its mojo, as the pandemic retreats, the online model appears to be faltering. Clearly, as physical classes resume, the allure of the online model has dimmed. Now, none of these edtech superheroes are listed yet, making it difficult to predict the extent of a business slowdown and its impact on P&L and balance sheets, but the initial round of layoffs seem a bad omen. The problem for edtech ventures simply is the cost of customer acquisitions, CAC, is now rising sharply for them as the pandemic recedes and offline coaching centers make an aggressive pitch for clients. To stay in the game, edtech startups are being forced to aggressively invest in marketing and sales to become visible in the Tier 2 and Tier 3 cities, which has almost doubled the CAC for them now, according to some estimates. That could be from about 40% of revenues earlier during the pandemic to about 80% now. As costs keep soaring, online companies are being forced now to become leaner to survive. Now, between 2014 and 2019, almost 4,500 edtech startups were born, many dying premature deaths, and only about 5% managed to raise funds to expand. Most of these edtech ventures have focused on test preparation from K-12 to entrance exams and online certification. But while an online model has its advantages, helping overcome infrastructure constraints such as the absence of a network of classes and teachers across cities, it is difficult to match the advantages of personalized attention and group studies that an offline model offers. Not surprisingly, edtech companies are queuing up to build a physical presence as well and offer hybrid courses. Byju's was perhaps the first of the block and bought Delhi-based Akash Educational Services last year for $950 million. Akash has a pan-India network of 200 centers, and Byju's hopes it will help it build a formidable offline presence as well. Unacademy is offering physical classes as well through Unacademy World and Unacademy Center for its civil services, JEE and NEET aspirants. Physicswala and Vedantu have plans to build an offline presence as well. In an effort to keep private equity investors interested, some of the Indian edtech companies are eyeing the developed countries to keep growing. The US is a market few Indian ventures are exploring. Not only would they earn in dollars, but also online model is an accepted model in many developed countries. Byju's future school will expand in the US, UK, Australia and beyond. Byju's own Great Learning too is expanding in foreign shores such as the US and Singapore through acquisitions. Bengaluru-based math and coding tutoring startup QMath wants a presence across 100 foreign destinations, including the US, the UK, Canada, Singapore, Dubai, Qatar, Australia, and New Zealand. Others too are exploring the global market. But will all this help the edtech companies fight back from this crisis? We'll have to wait and see, but clearly it's a deep crisis.